Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler. Welcome to another episode of That Annuity Show. Bruno, good to see you.
Good to see you again, Paul.
Yeah, well, today we've got a great guest from a very interesting company that has has worked with us on a couple of retire tech projects. Mr. Bill Egan. Bruno, do you want to introduce our guest?
Absolutely. It's a pleasure for me to introduce Jim Ryan, who is an executive director and head of distribution at Oceanview. And Oceanview, as we know, has been a very good success story in the MYGA space, entering not that long ago and really building kind of a strong franchise with strong talent, including our today's guest. So, Jim, welcome to the show.
Thank you, Bruno. Thank you, Paul. Glad to be here.
Yeah, Jim, maybe you just kind of give first of all, for our listeners, the backstory on Oceanview. I find it fascinating because, I started my career at a company with, I don't know, depending on how you ask, it was 50,000, 60,000 employees. Then I went to work for what I thought was a small company, about 100. That company's now 2,000 employees. I think, I don't know, maybe you, I think at Oceanview, maybe you're at 36 employees. I'm not sure.
Well, we've grown quite a bit this year. We're at 55.
55?
Yes.
That's double.
Yes.
Yes.
And, and I will say that we are very proud across the organization to have a culture that's really a destination for people. And so we have very talented, very focused employees, and we all work against the same goals. So it's all good. Oceanview launched, Paul, and I'm sure you remember, it was like late 2019. And, before COVID had really moved into the marketplace from financial services side. And so we had the opportunity to launch our first products in a very low interest rate environment. As you can imagine, it is very hard to launch a new insurer. But for us, the stars, the moon, and the sun sort of all aligned. And we were able to offer a very valuable product at a very interesting time. And fortunately, we're able to build our brand. In 2021, we launched our fixed indexed annuity product. And that also, in line with our MYGA offering, very simple, very direct, easy to explain to clients, was adopted as well by clients and advisors. So we've been very fortunate since we launched to continue to incrementally grow not only the organization, as I've mentioned, through the resources we have, but also the asset base and the sales.
A lot to unpack here. A lot to unpack on your secret sauce here.
No, this is great. Great
this
story.
Is what we're here for. What do you see as the biggest change that you've seen over the 5 years that you've since you've launched? What do you see as the biggest change, and maybe some of the things that you weren't necessarily envisioning at the onset that has changed and that came out as either challenges or maybe opportunities?
Yeah, that's a great question. So, change always creates opportunities, I believe. And what we have seen, not only change in the technology front, but also in the product front. And I think that carriers who have embraced technology early on through partners, Paul, like Zinnia and others, and then also through platforms that enable the ease of the transaction and the ability to deliver transparency, not only to the institution or the IMO, but to the agent or advisor, and then to their client. I always use this example, and my mother passed away probably about 4 or 5 years ago, but she was at 93, and she was very technology oriented. So she was very technology oriented and embraced technology. That's what clients are doing today. And I think if you're not behind that, then you're going to get sort of waylaid. We were very fortunate to have invested quite a bit on the technology front. We continue to invest, especially in those platforms. So that's one area. And then with products, again, change creates opportunities. And I think that in the MYGA space and the FIA space, which is specific to what we do every day, we see an intersection of the value proposition for MYGA showing up in the value proposition for FIA and vice versa.
I find it fascinating that within the last 5 years, we had significant changes in the interest rate and bond market. We had a pandemic, but what really you put your eyes on and you focus on the big prize here is technology and products. So I think that speaks a lot to what you guys are doing. Talk to us about MYGAs and FIAs. You mentioned you're obviously you have an offering on both ends there in multiple distribution channels. Where do you see those products going in the next 5 years?
Great questions. Obviously, a lot of that has to do with how the markets perform in the future and what the needs are of the clients. From what I can see is that, and this is important, the environment in which we grew our MYGA business, I'm hoping that we never see a pandemic like that again and, that type of environment for investors. But I believe that carriers who can put forward valuable product and build a brand and a great experience for advisors are able to then introduce those advisors to other products that they normally wouldn't sell or offer to their clients.
Yeah.
So where do I see the industry going? I think, again, change creates great opportunities for everyone. We've seen more and more iterations of MYGA-esque and FIA-esque types of products come in the marketplace. Again, you'll see, variable annuities are starting to pick up again a little bit. That's a good indicator, not a market that we play in. And I think the RILA business continues to grow as well. That's all good. That's all good for all annuities because that means a larger subset of advisors are adopting the value propositions for annuity products. And I think in this day and age, when it comes to being able to guarantee assets for clients in a way that, likely their advisor cannot guarantee their entire portfolio, but having a segment of your portfolio guaranteed and still performing is really important going forward.
Maybe we talking about the changes. So changes in product. We had Bobby Samuelson on talking about the changes in MYGA. And what did he call the MYGAs with the
MYGAs?
MYGAs. Interesting. We'll see. I guess before I ask my next question, what do you think? MYGAs, will that be the hot product 2 years from now, or should we wait and see?
It's tough to tell. I think that one of the things that we are seeing in the marketplace is more guarantees over a longer period of time within a product. And so especially in the FIA space, where you've got companies offering annual point-to-points and then side by side offering a guarantee for term, that's going to become more prevalent.
Yeah.
And, it's interesting. I think it will have a lot to do with the way that the market performs overall. But at the end of the day, companies that are positioned to offer products that hit on different types of solutions will be winners as long as they are simple. We've seen it in all the different product sets, right? I think, with variable annuities, maybe a little bit with RILAs, but the more complex these products become, the less acceptable they become on institution and broker-dealer shelves, and the less understood they are by advisors and agents. They're not going to get adopted by clients.
Yeah, interesting. Simplicity, that's an interesting word to grab onto. I was at a Limber National Conference back, I think it was in October. Bruno, you should have been at this one. It was good. There's a panel discussion with distributors. I think Mike Ebmeyer at Simplicity
Yes.
Was up with a couple other peers in the market. They were saying exactly that, Jim, talking about simplicity, talking about simplicity of product design, but they also were talking about simplicity of experience. You mentioned a little bit about that. Not to date myself, but I worked with MetLife way back when with some people you probably know to get into the broker-dealer space, and they weren't asking for simple products. The only thing we had to do was be on DTCC. How do you see the distributors changing what they expect from the carrier on a technology and a user experience side?
Yeah, so I think that's becoming more and more of a table stake, right? And so as opposed to what type of products you offer, it's really about how are you able to offer products to our advisors that create efficiency, which is really what carriers want as well, because that keeps our costs down. But it also keeps efficiency on a suitability perspective. It keeps efficiency on NIGO processing, all the things that can cause, I'd say, a clog in the pipe at a broker-dealer, an institution, and even an IMO. Pushing more and more technology through DTCC, through Firelay, through all the different types of platforms is critical. So before we even start to talk about product with a distributor, they want to know, are you able to deliver that product in the fashion that we expect? And I think at last I checked, we're on 9 different types of electronic platforms in an effort to serve our customers. So I feel really good about that. It's one of those things where you talk to a prospective client and they're like, well, do you have this? And, yep, we got it. So it's all good. Exactly.
Well,
exactly.
It is. I remember discussions, and I won't name the companies. My companies, look at my LinkedIn, having debates with some of the IT people saying, we've got to pick one platform and go with it. And I said, no, you talk to us a little bit like, how do you have to structure a company to be able to be as flexible as that, to take applications from 9 different systems and not create bottlenecks? Clearly, you're doing that with small group. Maybe a small team is the answer, right?
Well, yeah. So I think it's like, you make a decision, right? You're in a fork in the road. You say, okay, well, if we invest in technology, it's a better experience for our end client, customer. It's a better experience for our advisor and distributors. And we can actually spend that good money on the technology and not have to spend it on resources that, in a downturn aren't going to be utilized.
Wow. Efficiency. I think that's definitely the key word here.
Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Yeah. Well, let me ask you, I guess, you were an upstart. You said the stars aligned, the tide was going in. We've seen a surprising number of companies, come into the marketplace and actually find, I would say, decent amount of success in what I think would have thought was a crowded field. Do you think there's an end to this? I mean, if you look ahead a couple of years, do you see new entrants slowing? What's your prediction for the level of competition at the carrier level?
So I do see it slowing. I think that while over the past 5 or 6 years, the market has taken a look at new entrants and obviously have been skeptical, but these new entrants may have offered products that were enticing, whether rate driven or compensation driven. I think that the larger opportunity, the larger sea that folks want to be in, and that's where Oceanview is heading, is in an environment where compensation is level and you're really building your value proposition. And, again, the technology and the efficiency in which you are able to deliver that. So I think there is going to be more scrutiny around carriers who are coming into the space. both from a regulatory perspective and then also from an institutional perspective. It's going to be harder to get on shelves, I believe.
Do you see any future for the direct-to-consumer channel, or do you think we'll see cars driving themselves before that? What's which comes first?
Yeah, I absolutely think so. A couple things in the marketplace are changing. 401k plans. I think the first entry opportunity for direct-to-consumer likely lies at the workplace, right? So where consumers are becoming more familiar with products and brand through their employer-sponsored plans. I do believe strongly that an advisor adds absolute value, not only for the carrier through distribution, but also for the ability to have these products placed correctly within a client's portfolio. Yes, I mean, our products are at Oceanview are very simple, straightforward, transparent, but there are inherent questions around annuities that advisors are able to answer and should be providing to their clients. And I think it's tough for clients, someone who's been working, say, in technology for years and is retiring. Do they really understand how an annuity accumulates, its fixed indexed annuity accumulates value? And then when that value is, when you're ready to retire, how do you take that out? I think, will we see cars driving themselves beforehand? Probably, because I think there's just too much value around an advisor for clients to switch and go direct.
Yeah, that's a good point, because we always think about those that jargon, those acronyms, like, oh yeah, the point to point on a fixed index annuity. But we sometimes forget that the end consumer is not necessarily familiar with that. So there's a lot to add there.
Yeah, and Bruno, clearly, we need to get you to San Francisco and Phoenix, where you can get picked up by the Waymo all by itself. They're working. They actually are. I have friends who are down there telling me sending me video clips of themselves being driven around. But I agree with you, Jim. That, the valued advisor is significant, but we're all looking to be more and more efficient. I ran the compensation organization for a while, one of my crazy jobs in my career, and we've had a lot of focus on commission percentages, where sometimes the focus really should be, well, how much have you actually earned as an advisor? Where do you see efficiency coming next? I have one hypothesis to throw at you, but I'm curious. How do we get more efficiency out of the distribution systems we have today?
Everything should be paperless and electronic, I believe. It's a hard move, but it's moving, again, incrementally in that direction. But I think it is worth carriers to offer a little bit more of an incentive if advisors and clients are accessing or processing the products and then accessing, through advisor portals and client portals. It creates efficiency around cost, which most carriers will put that right back into the return for the client. And I think that's a great opportunity.
Yeah, it's interesting. I remember when the all the broker dealers took the commissions down, on the VAs and some of the annuity sales, and really the sales didn't drop. Now, probably what happened were case sizes went up. I bet that's how the math worked out. MYGAs are interesting, right? MYGAs are those products where the commissions are lower. Do you think there's any possibility? This is what I find interesting about the MYGAs turning to FIAs is suddenly you have a lower commission product that hits a lot of those needs, and maybe it is simpler, but it's also advisors able to sell more of these quicker. I mean, do you think there's any possibility that the MYGA trend will keep going well beyond the point in which interest rates start to drop?
Yeah, I mean, that's a great point, Paul. We have your regular tenors of 3, 5, 7, and 10 in our MYGA, but we also offer a 2-year, a 4-year, and a 6-year, all at a reduced compensation level, which provides a more competitive rate for the client. And you'd be surprised how large the popularity is of 4 and 6-year tenors. So again, I think there will always be a space for fixed money. And if you're providing a really good experience and a product to a client, and you're competing head to head on rates that are out there, including CD rates, I think there will always be a market for MYGAs.
Oh no, that's good. Again, so we touch based on those rates, the competitive landscape. I want to get back to, it's kind of the ease of doing business, the transactional aspect. Obviously, consumers hear a lot of stories of not just annuities, but financial products in general being very, very complex to handle in the event of a death, let's say, or something, right. other types of situations. Are you part of any type of industry initiative to help that, to address that, and to make sure that consumers have an easier experience through either through those processes or customer service, whatever it is, but to make sure that consumers have a better handle or a better experience with financial products in general, but annuities in this case in particular?
Yeah, Bruno, I think, specifically for Oceanview, again, our leading mantra is to keep it focused on simple and providing products that don't have a lot of moving parts for clients to possibly misunderstand. When you buy a 10-year product, for example, and you understand that product in the first year, do you really recall every detail of that product by the 7th year? And so I think it's very important for not only the industry, but also carriers to stay front and center with all the industry outlets like IRI, BISA, LIMRA, be involved with those communities to push education, not only on the advisor level, but at the consumer level. That consumer advocacy, I think, really helps build the brand of what an annuity can do for a client in retirement. And it also helps build the visibility of the industry overall.
Yeah, I think IRA has done just a great job pushing a lot of the digital initiatives. Job. Yeah, I saw they just are tackling the replacement process. Wow. Yes. Finally, somebody's grabbing that bull by the horns. We're hoping to get somebody. That'll be such a benefit for the overall industry, and again, the experience of the end client, the investor. Yeah. Well, we're close to the top of our time. Okay. Bruno, any final thoughts or questions for Jim?
No, thank you for coming. I think we always like to hear good stories, good success stories, and I think it's the future bodes well. That's something that we're grateful that you came on.
Yeah, Jim, I appreciate you having us. Yeah, thanks. I guess maybe I'll put you on the spot. I mean, any big bold predictions for the annuity industry in 2025? You care to share? Yeah. So continued growth. We promise you we won't like bring this back and test it. So I'm a big fan of incremental, right? So incremental growth is always good because it builds credibility around the industry and around the carriers and the products. It also makes advisors incrementally, if you're gathering more advisors every year, you're educating them correctly and they're using your products in the correct way with their investors. So I think that we're going to see very positive incremental growth continue over the next 5 years in our industry. That's going to be a mix of products, obviously, based on economic conditions, but more and more people will be using annuities to secure their financial futures and their retirements. Excellent. All right, Jim, thanks for joining us. Thank you. Yeah, tell me if people have questions or they want to get in touch with you. What's the best way to do it?
Yeah, the best way to get in touch with me directly is James Ryan at oceanviewinsurance.com.
And congratulations on your continued success.
Thank you very much, Paul. Thank you, Bruno.
Great.
Thanks to you.
Thanks for listeners. Make sure you share the show, and of course, tune in next week for another great episode of That Annuity Show. Thanks.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.